Hello everyone, newborn investor here and welcome to another video. Today we are gonna go through my thoughts on the Chinese electric car maker NIO and the reasons why I think it could possibly grow your money by 10 times in the near future. So if you're interested, make sure to stick around as we are starting right now. Founded in 2014 by William Li, NIO, the Chinese automobile manufacturer, specializes in designing and developing electric vehicles. NIO has achieved some significant milestones in a relatively short period of time it has been around. They currently have around 4 models in the coupe and the SUV segment, with another 5 models in pipeline across other segments. NIO is more than just an electric car manufacturer. They have ventured into other divisions such as battery as a service, NIO Power and others, which makes them extremely valuable and appealing. NIO could be the closest electric vehicle manufacturer that can put up a fair competition with Tesla. So can NIO really keep up with the expectations? Well, that's exactly what we are going to cover in this video, so stay tuned. By the way, if you like the video and find it valuable, make sure to hit the like and subscribe button. I really appreciate your support as it keeps me motivated to put in the long hours for making these videos. Alright, let's move on. NIO stock has grown over 600% in 2020, and that is mind-blowing results despite the pandemic. NIO delivered 4,708 vehicles in September 2020, a new monthly record representing a strong 133% year-over-year growth. In 2020, NIO delivered a total of 26,375 vehicles, increasing by 113% year-over-year. The stock performance can mostly be attributed to the feat NIO achieved in terms of delivery. China has recently raised its sales target for electric vehicles to 25% of new car sales by 2025. Though demand for electric vehicles rose rapidly in recent years in China, they still only account for about 5% of automobile sales in the country. But a steep reduction in subsidies this year has dampened new energy vehicle sales in recent months. In October, new energy vehicle sales declined by 45% from the same period a year ago. But with a new sales target for new energy vehicles, electric vehicle adoption should pick up in the coming months, and NIO is well positioned to capture the opportunity. In the US, California is embracing electric vehicle adoption like never before. California Governor Gavin Newsom signed an executive order that bans the sale of gasoline-powered passenger cars in the state starting in 2035. That means only electric vehicles will be available for purchase in 15 years. For NIO, the US is mostly an untapped market which is dominated by Tesla. NIO still hopes to become a truly global brand with a presence in key markets like the United States and Europe, but there is no fixed date for its entry into either markets. Shares of NIO is a new favorite among momentum chasers as the stock continues its run to new all-time highs. Analysts and big banks seem to love NIO stock, and NIO recently received back-to-back upgrades from JP Morgan and Citi. JP Morgan upgraded NIO stock to a buy from a hold, raising the target price to $40 a share. Following JP Morgan, Citigroup upgraded NIO stock to a buy rating and increased the price target to $33.20 from $18.20. Over the last few weeks, NIO stock jumped from $12 to $28.48 and could push even higher following Analyst Upgrades and impressive deliveries. To me, NIO's battery programs could be a game changer. NIO launched its battery as a service program that provides a discount on the vehicle's selling price. Customers are sold the vehicles without a battery and then they are enrolled for the battery as a service program. This program will help to lower the cost of owning a NIO model, as batteries are estimated to account for around 40% of the vehicle's cost. In addition to battery as a service, NIO also has successfully tested and deployed battery swapping technology across China. NIO's battery swapping services allow users to replace empty batteries with charged ones and bypass the comparatively slower charging process. This technology could eventually allow recharging electric vehicles to become as fast and convenient as refueling conventional automobiles. Till date, NIO has completed over 500,000 battery swaps at its 131 swap locations in 58 cities throughout China. NIO realizes the importance of a support infrastructure for the widespread adoption of electric vehicles, and I think NIO's battery as a service is the right move. With large investments from Tencent, Chinese province of Hefei, and the proceeds from the sales of NIO stock, the company has solidified its financial position. Without these investments, NIO probably would not have survived. The company has around $1.6 billion in cash to meet their funding requirements. Even though the company has reported increasing sales, they are yet to be profitable. Tesla continues to far outsell any other electric car company in China, but NIO's vehicles likely have what it takes to remain competitive in the Chinese electric vehicle market, especially since they are meaningfully cheaper than those of Tesla. To me, NIO's current valuation is extremely high as it is trading at a capitalization of $34 billion. But I feel good about the company and will be interested to get in if the stock pulls back to $15 range. And I will adjust my position size accordingly to minimize my exposure on NIO. Now, I would love to hear from you guys. Would you be investing in NIO? If so, at what price? Leave a comment below with your answer and I will be sure to follow up with you. Also, if you liked this video and found it valuable, make sure to hit the like and subscribe button. I really appreciate your support as it keeps me motivated to put in the long hours for making these videos. So until you hear from me again, stay safe and thanks for watching. Bye.